This concept that we're going to talk about today is absolutely destroying your investments and you don't even know it, guys. It's kind of like a silent destroyer of your investing. Now, what we're going to discuss today seems kind of counterintuitive at first, but over the long run, it makes the difference between massive wealth built or just kind of some ho-hum numbers in your portfolio. So let's discuss this in detail in regards to Sofi, and I'll give you my next set of price targets for Sofi and my complete plan moving forward. So make sure you like the video if you like videos like this and you like the truth without the hype. All right, so first we'll get into the juicy details with a video that I posted to my group that kind of breaks down the concept in depth, and then I'll come back in the end there with a hard truth that you may not like, but that's okay. Don't worry about it. I'll make up for it by giving you my price targets for Sofi and my plan for Sofi moving forward. And if you missed it, no worries, guys. Just make sure you take advantage of the Cyber Monday sale that's going on right now for my group, where you get to see all my buy and sell alerts in real time. You get my watch list complete with price targets. You can take 5 courses for free, use the stock analyzer tool completely for free. You get 3 to 5 videos like we're going to watch today in there every single week. You can slide in my DMs, jump on our live Q&As that we do at least weekly, if not more. We do earnings calls live. There's just so much involved in there, guys. Make sure you check out the pinned comment and take advantage of the Cyber Monday sale before, Monday's sale expires. All right, so now that we got that out of the way, let's jump into the video right now, and I'll give you my price targets and my plan for Sofi and that little ugly truth that we have to talk about. All right, so there seems to be a lot of interest from you guys in regards to Sofi. I'm getting a lot of DMs about it and such, so I just figured I'd talk a little bit more about the stock here. Yes, I agree with you guys. I think it is setting up very, very similar to Palantir, at least so far. That has been the case. They basically run it up and then beat it down, run it up, beat it down, great quarter, beat it down, run it up, beat it down again after a great quarter, rinse and repeat. And if you remember, back when Palantir was doing that same exact thing, when they had their first run up into earnings and then they showed surprise profitability, right? Which we're kind of hoping to hit here this next quarter with Sofi, it ran up even further, but then it cratered all the way back down into the 7s. So we got one more chance to buy before it's kind of gone up over 10 and hasn't come back down under 10 again. Obviously, we're flirting around with 20 right now. So yes, Sofi is following a similar pattern. Is it going to act exactly like Palantir? My guess is probably not, because there's a lot of other hype. There's a lot of other interest in Palantir in regards to the trade with Palantir that I think has kept the momentum a little bit further than I think it's going to go with Sofi. Not the least of being Sofi is fintech, and therefore that's a little bit more in the doghouse as opposed to Palantir was AI, which of course was all the rage right whenever they turned profitable there. So a little bit of luck in the timing and such with that have kind of give it a little bit of a harder run and a little bit stronger support there when it does eventually trade down. So they're kind of different right there in a sense, but I kind of get the sense that you guys are seeing the same exact thing I am, that it's just following that pattern. It's going to follow that pattern until it turns profitable, which, if I'm guessing, and it's strictly a guess, it's probably exactly what's going to happen. And I have, probably 8-9 quarters worth of steady, consistent, awesome performance from a company. So I have no reason not to trust that they're going to continue to execute through the rest of this year and into next year. So for me, am I concerned with that? Not at all. Will I maybe have to wait a little bit longer to see returns than I had to wait with Palantir? Maybe so, just based upon its fintech versus AI, and obviously the differences in terms of where the trade was this year versus where it's going to be next year. Nobody knows. I'm not here to try to guess where the trade is. I'm here to just simply add shares and build out positions as large and as big as possible, because 5 years from now, 10 years from now, all that matters in the end is share count. Nobody's going to care 10 years from now, wherever. I have no idea where Sofi will be in 10 years, but let's just say they continue to perform for the next 10 years. And let's say it's, I don't know, throw out your number there, $50, $80, wherever you want to project out. Again, projecting out that long is just simply guessing. So I can simply throw out a guess. I don't need to plug it in a spreadsheet. It's a freaking guess, guys. Nobody can accurately predict beyond, 2-3 years max. You're really guessing at 4 at 5, you're just totally guessing. So beyond that little time frame, you're really guessing. So for me, throw out whatever number you want there. Doesn't matter whether or not your shares, you bought shares in the 6s, 7s, 8s, you're probably happy regardless 10 years from now. It doesn't freaking matter. What you'd much rather worry about, hey, it'd be great if you had, let's say, 1,000 shares at, we'll say $5 is your average. Hey, that's great. You got a great average down there, but I'd much rather own 10,000 shares at $8 than, 1,000 shares at $5. There's just a huge difference there in terms of wealth built. And as a company continues to perform over the long run, and as they get further and further away from that, kind of beginning marker where you started, the less and less that cost basis matters. And the more and more you just want more shares. Obviously, when you look, I don't think it's going to perform like Apple, but if you happen to hit an Apple or a stock like that, or, early days Tesla or something like that, where you've had these, tens of thousands of percent runs in the stock, it doesn't freaking matter. Sure, it'd be great to have had a lower average, but the reality is you're just happy you had all the shares that you could buy back then. And that's what matters the most, is share count. So that right there is kind of what I'm focused on with this. And I already have the shares that I want, which just means I'm just increasing the share count because Wall Street continues to get stupid. So that's kind of the play there. So here's the ugly truth that you guys have to hear. A lot of folks get caught up not on share count, but on their average because of ego or some sort of other vanity metric. And that to me is exactly what an average is. It is much more of an ego or a vanity metric than it is something that actually matters. Everybody loves seeing a low average next to a really high price. I agree completely there. But that feeling can lead you to not add more shares because it's actually a false feeling in the first place. Do the math, guys. That's all that I'm asking you to do. Basically, do you want 1,000 shares at $5 per share for SoFi, or would you much rather have 10,000 shares at an $8 average? I don't know about you guys, but if SoFi is just a $50 stock in the future, $30, $80, whatever number you want to put out there, whatever it is, if it just happens to be that number, myself personally, I would much rather have 10,000 shares at $8 versus the other option. That's what I want to see in my portfolio whenever I open it up and I look in the long run. So I'm sorry, if you're into the vanity metrics, cool, understand completely, but I want to build real wealth. That's what we're here for. And that's exactly the reason why we had to have this discussion today. So let's kind of jump over now to my price target for SoFi. And you guys know it already. The first price target right there is $6.69. And of course, I'm hoping Wall Street gets stupid once again and beats it back down into the fives. It gets down into the fives. That right there will be my very next buy point. And obviously, I don't think we'll ever see the fours again. But in the event we do, because it's Wall Street, so nothing's impossible, man, there's going to be such a huge, basically my buys at 669 are one level. It gets down in the fives, I'm going to buy a lot more shares. And of course, if we get down in the fours, I don't know, that my whole month basically, which is going to piling into that stock at that stage. No, it's assuming that they perform and continue to perform quarter after quarter after quarter. So unless there's some sort of a surprise or something else like that, that is absolutely what I plan to do. That is absolutely where I plan to go in the end. So that right there is my plan for SoFi until the next earnings call. So that way you guys have it right here. And make sure you take advantage of the Cyber Monday sale right now before it expires tonight, where you get to see all my buy and sell alerts in real time. You get my watch list complete with price targets. You can take 5 courses for free, use the stock analyzer tool completely for free. You can slide in my DMs, jump on our live Q&As that we do at least weekly, if not more. We do earnings calls live. There's just so much involved in there, guys. Make sure you check out the pinned comment and take advantage of the Cyber Monday sale before, Monday's sale expires. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.